Many of you have asked me for an update on HIMS and HERS Health. The stock is down 5% after reporting earnings, which is actually good news because the stock goes down 20 to 25% on average after reporting earnings. So 5% down so far. It's at least better than it was before. Now, in terms of the report itself, it wasn't, you could say, an amazing report. It wasn't a terrible report. It was a great report. There were a lot of good things in the report, but there were also a few concerns that I've had that I think we should monitor over the upcoming quarters. Now, in terms of revenue growth, pretty amazing 38% revenue growth. Monthly revenue per subscriber has increased from $80 to $92 per subscriber, which is telling us that HIMS is monetizing those subscribers better through cross-selling and other avenues with the labs and other things. And I think that's really amazing for the company. Now, what's really important about the revenue growth is the United States reaccelerating again to 16% in growth. Now, the last quarter, HIMS declined in United States revenue, and that sends the wrong image, which is that the United States business is peaking, and this is why HIMS is doing the acquisitions. But this is not true because they increased 16% this quarter, and the management is guiding for a further reacceleration in the second half of 2026. That's pretty amazing for the company. Internationally grew like 1600%. This is largely due to the eucalyptus acquisition. Now, in terms of subscribers, subscribers grew to 2.9 million subscribers, 19% year on year. That's also really amazing. But the concerns that I have with the subscribers growth is the fact that they included the eucalyptus subscribers in the mix. So if it wasn't for the eucalyptus acquisition, what would be the subscribers growth of HIMS? Would they have declined in subscribers? Would it be flat quarter on quarter? What would it have been? So that's, you could say, a concern that I have where, it's a concern, but it's not really the worst deal in the world because I know that HIMS is expanding internationally. So I would love to look, for example, at the next quarter and see what would the total subscribers growth be. Like how much could eucalyptus grow in subscribers and what would it be quarter on quarter? I think that would be much more telling than just looking at it now with and without the acquisition, because now they acquired the company. Next quarter would tell us what would it be on a quarterly basis, and then we can determine HIMS total subscribers growth. Now, if you look at the company's profits, they don't have any profits. The company posted a $128 million loss versus $43 million in profit. That's really bad, guys. But it's due to a few things. Two of those things are mainly one-time expenses, which is legal contingencies and acquisition-related expense. Together, those were like, I believe, around $70 million. If you adjust for some of them, the net loss was $20 million versus a profit of $48 million. So still not really a good report, but it's not as bad as losing $127 million. Now, in terms of adjusted EBITDA, it has also declined. Even if you adjust for all the one-time expenses and stock-based compensation and the fair value of asset changes, all the one-time stuff, adjusted EBITDA was about $60 million versus $82 million. Now, some of it has to do with margins normalizing in general. Like I believe in the long term, HIMS EBITDA margin will likely be between 8 to 10%. I was saying it's going to be a little bit more than that. So some of it has to do with margin realization, but I think some of it also has to do, I believe, was the company's acquisition of eucalyptus, because they got a lot of those people from eucalyptus, like in the general and administrative. The company grew G&A, which is personnel expense, from 67 million to 165 million. So I'm sure once they integrate the companies, they will likely be able to save a lot of those expenses by using AI, by using one person for two things. And just, there will be a lot of overlap, especially with Zava that HIMS owns. And I think they will most likely be able to reduce some of the personnel expenses and other expenses over time. They did spend more on marketing. It was like 50 million more, which is in line what the historical increase in spend for HIMS is. It's not anything new. It's not anything crazy. But the other expenses like G&A, I think those are mostly one-time stuff that HIMS will likely be able to figure out after fully integrating the acquisition. In terms of international growth, it's up 17x again, largely due to the acquisitions. Now HIMS has a pretty amazing global platform, reaching 250 million adult people in the United States, 30 million in Canada, 20 million in Australia, 100 million in Japan, and they will expand them in many different avenues like sexual health, dermatology, mental health. And mental health, which is huge, they're only in the United States, and they can expand it in Europe and in so many different countries and places. And I think that would drive a lot of growth for Hims and Hers Health. Now, in terms of the profitability or adjusted EBITDA margin, it has improved quarter on quarter. It was 7% last quarter as margins were normalizing. Now it's 8%, which is a decent improvement. In terms of full year guidance, they're expecting 9% EBITDA margin. I think that has affected the market a little bit because the market was expecting, I believe, around 11 to 12%. This was their previous guidance. Now they put it at 9%. And that's also due to the eucalyptus acquisition, which is unprofitable, and they have to get it to profitability. There's a lot of things going in it. But I don't believe we're going to see lower than 8 to 9% EBITDA margins. If we do, I would be really shocked, and it would affect my thesis. But I personally believe margins are bottoming out right now, and it should look much better from here with a sustainable 9 to 10% EBITDA margin. But they did increase their outlook in general. Overall revenue growth will be about 32 to 41%. That's a lot of growth for the company. They also maintained the $6.5 billion target by 2030, which is what my valuation model is based on. Now, if you look at the current guidance, it's about almost $3.5 billion. And their target is $6.5 billion. So they barely have to double revenues by 2030 for them to get to 6.5. I think the company can easily do that, in my opinion, and they should be able to get to about $1.3 billion in EBITDA. If we look at the current valuation of HIMS, HIMS is now trading at 2 times sales. I believe 2 times sales for such a business that's expanding internationally, international growth could potentially be huge. You have the peptide call options, which is the company is doing a lot of things in peptides. They have a peptide facility. They have so many different things. They're getting better quarter on quarter, and it's trading at 2 times sales. I think this is too low. I think such companies should trade between 3 to 5 times sales, in my opinion. And if you want to do the calculation, their guidance is $6.5 billion in revenues by 2030. The current market cap is like $7 billion, guys. So 3 times 6.5, that's about almost $18-20 billion, and the current market cap is $7 billion. And that's 3 times sales. If it trades at 5 times sales, then it's much more than that. So I believe the company is still undervalued. I believe it was a good report. I have some concerns, you could say, with the subscribers growth because they included eucalyptus, which is not really good. I want to see how they look like all in together. And we have to monitor those things quarter on quarter to see the trend within Hims and Hers and the overall growth of the company, including eucalyptus, which is very important. But that was my opinion on the stock. I'm still holding it. I haven't sold, and I'm going to wait for the next quarter and see how things look like quarter on quarter with the acquisition. So I hope you enjoyed this update. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.